For me, earnings season is a time of irrational buying and selling of stocks and a lack of fundamental buying. But if you're a long-term investor in high-quality companies like me, earnings season is an amazing time to make your portfolio even more high quality and add to some of your favorite companies. You could sell out and take gains of some companies that have been trading higher, or you could double down and buy more once your favorite companies go on a dip. So today, I will be sharing 3 stocks that I am looking to add to after earnings. I'll tell you where I'm looking to buy, why I'm looking to buy, and more. And guys, if you're new to the channel, we are literally less than 40 subscribers away from 1,000, which is honestly nuts to me. So if you're new and you haven't already, make sure to subscribe. We promote real man's investing over here. We actually invest in quality stocks. Now that you've done that, roll the intro.
Hello, I like money.
If you guys actually want to see these buys in real time and don't want to wait every month to see which of these stocks that I'm buying, join the Discord. I post all my buys right as I do them, meet like-minded investors, have a lot of fun on there. And the first company should have come to no surprise if you've been a viewer of this channel, which is of course Visa, stock ticker V, which is currently trading at $234.29 and is a company that I literally just bought 20 minutes ago. Visa, I think, is one of the most financially sound companies in the world, and I would argue is a top 4 high-quality company in the world. Visa, it's very hard to compete with them. They're in a duopoly right now with MasterCard. As I mentioned, Visa is as financially sound as a company you can get. They have large, consistent, and rapid growth when it comes to all their financials. Their revenue consistently grows, EBITDA, amazing free cash flow growth, net income. And when I look to direct a newer investor into what a company's financials should look like, I point them right to Visa. This is a company that consistently outperforms the market in when it regards to total return. They are a very profitable business with non-replaceable payment networks and systems. As per usual, Visa did beat earnings this quarter. They had a better than expected quarter. They beat revenue estimates of $8.1 billion, and that was up 12% year over year, which is incredible growth. Net income was $4.5 billion, up 7% ahead of the consistent estimates by $100 million. That's a net profit margin of a crazy 56% for the quarter, which is incredible. And they also beat earnings per share estimates, and they hit $2.16 on that, which is up 9% year over year. So Visa's doing its thing, of course. They're continually growing largely rapidly. Going back to Visa's financials, their free cash flow has consistently grown over the last 10 years, and I expect that to continue growing as well. They're an incredibly strong company that is really impossible to compete with, and they have crazy profit margins. Visa's a company that I've realized is worth paying a premium for, as they do consistently outperform the market. I didn't need any more, but this earnings report was just more confirmation of how strong of a company that Visa really is. Visa's stock price has climbed a lot recently, as a lot of investors I think have realized of how strong of a company this is, but I think there is still value in the price at $230. They've consistently grown their earnings per share. They have a lot of cash compared to debt on hand. Their dividend is also very rapidly growing as well, and that will continue as Visa continues to grow their free cash flow and other revenue streams. Over time, Visa also buys back shares, so you're becoming more of an owner with the equity that you have in the company. I think right now Visa is trading at a fair price relative to the value that really offers long-term investors. I think Visa will continue to grow their revenues, free cash flows, etc., and reward shareholders, as I mentioned, with that juicy dividend growth and buybacks. When it comes to Visa stock itself and what I'm personally buying at, I was a heavy buyer in the 210s, 220s, and I even think it's fair price right now. I think from 220 to 250, it is fair price. 220 under, I think it's a really good buy. I will continue to buy on dips and likely build up my position. Currently, Visa makes up roughly 5% of my portfolio, and I'd love to have it be in the 2,000 range or make up 10% of the portfolio. That's how strong of a company I think it is. Alright, the next company that I'm looking to add to my portfolio after earnings is one that I actually don't own currently, but I have been eyeing for a while, which is of course Texas Roadhouse, stock ticker TXRH. Texas Roadhouse has been on a run recently, and I don't love buying stocks when they've had a crazy run. With that said, though, it's hard to deny that they're a really high-quality company and a great restaurant to own. From what I've heard and seen, Texas Roadhouse demand is very high at the restaurants. It seems like a great atmosphere and a great experience, and it's overall a very simple business model for me to understand, and people are buying it looking at the financials. Their financials are very solid with great revenue growth, EBITDA growth, and free cash flow growth as well. They're currently trading at a 20 forward P ratio, which I think is pretty solid. They don't have any debt, which is a big thing that I like as well with this company. Another big thing too is during the pandemic or a recession, I think this is a company that will still do pretty well, as they didn't even cut their dividend during 2020. They actually have pretty solid profit margins too. For being a restaurant, a standard profit margin is 6.69% and an operating margin is 7.92%. Texas Roadhouse has also grown its earnings per share pretty consistently, except for in 2020, which obviously wasn't their problem. Also, their dividends, as I mentioned, they have paid a really aggressively growing dividend in the past few years. I question how aggressive it will continue to be, but it is great to see that they're continually rewarding shareholders. They are also, over time, buying back shares, which is awesome to see as well. They also have a very solid return on capital employed, or return on invested capital as well. Texas Roadhouse's earnings are pretty solid as well, with a revenue beat pretty much, an earnings per share beat by 1 cent, 14.7 year-over-year revenue growth, which is very impressive to see. I want to see how they continue expanding though. Texas Roadhouse has also showed me that they have pretty good pricing power. I talked a lot about pricing power in my most recent video, which you guys should go check out, link in the description or in the top right corner. I go over everything of what I look for qualitatively and quantitatively in companies. Commodity cost inflation from 5% to 6%, so obviously it's something they're still kind of dealing with. Positive comparable restaurant sales growth, which is good to see. And again, still being able to raise prices with no crazy impact on sales or store volume, which is very good to see. They're opening 28 Texas Roadhouse restaurants and 33 Bubba's. So I think this earnings report has just confirmed to me Texas Roadhouse is just doing its thing. No crazy great or bad news, but it is a solid earnings report overall. In reaction to the earnings, Texas Roadhouse stock is down 2.8% at $109 currently. I said I'd like Texas Roadhouse at $105. If it dips more to $105, $106, I will probably be adding. So I hit that 105, 106. Don't be surprised if you see me buying. I think it's fairly priced at a 24 P ratio right now, but if it dips down to the teens, I will definitely be looking to add. And lastly, guys, we have Union Pacific stock ticker UNP, which has traded up a lot this week. The stock jumped nearly 10% again after there was confirmation that the former COO, Jim Vina, would be appointed CEO after Lance Fritz resigned after Sorobin Capital basically attacked him last February. This is a really interesting one, and I'm going to get deeper into the Sorobin Capital situation, but looking at Union Pacific's financials right now, they are very solid with consistent revenue, EBITDA, and free cash flow growth, just large, consistent, stable growth, what you love to see. They also have a great history of rewarding shareholders through buybacks and dividends, which they're doing right now. They currently have a 2.41% dividend yield. They are trading at a forward P ratio at around 18, which is solid for an industrial company. Union Pacific gives me exposure to railways, which is an industry that I've been eyeing to invest in for a while. I recently just learned a lot about how this country really does rely on railways for our transportation of goods, etc. And Union Pacific really is a legal monopoly if you really look into it. The profit margins are high in this industry, the competition is low, and the barrier to entry is very high. Looking at a mature company like this with very solid and stable financials, you wouldn't think that they have much room to grow, but according to Sorobin Capital, that's not the case. They basically called out the former CEO, Lance Fritz, and told him to resign after they brought up multiple facts and called him out for poor performance, execution, workplace environment, etc. And they said that they had much more potential with the assets that they had, and they were very disappointed with how the company is being ran. I owned Union Pacific before this letter came out, and I was shocked to hear that there could have been better execution. Looking at their financials now, you wouldn't think it could get much better, but Sorobin Capital obviously thinks that this company's in better hands of Jim Vina. They think they can see much better growth and overall business execution with Jim Vina. Actually, after this letter became public too, Lance Fritz even resigned from the company, which is kind of crazy, which hasn't really happened a whole lot. When you think of it, they basically bullied Lance Fritz into quitting. So the big jump in stock price was because Union Pacific actually listed as Sorobin Capital and hired Jim Vina. Their earnings weren't actually that good in general though, with a lot of missed revenue and EPS expectations and not great positive news, but investors are clearly not paying attention to that. Not great to see these financials trend this way, but I would like to see how they look annually. I also want to do some more research myself on the railway industry and to really understand how cyclical it is, etc. So I'm not an expert on this industry yet, as I just bought in. Union Pacific's financials have been pretty stable with good earnings per share growth. Over time, they also do share buybacks, and they announced a share buyback program, and they have very solid return on capital employed, sitting near 15%. Looking at these financials, you think that they're pretty great now, but it's crazy to think that Sorobin Capital thinks that there could be so much more potential. I think that's the main reason the stock is up nearly $30 in the last month. The fact that there's more growth for cash flows and looking at their dividends and buybacks right now gets me really hyped as an investor. Looking closer at that dividend, they have a 2-year dividend growth rate of 10.22%, a 5-year dividend growth rate of 12.23%, and a 10-year dividend growth rate of 14.19%. Very solid there, and they are set to hike it next quarter. So what am I doing with UNP right now? Well, with UNP, unfortunately, you guys know me, I don't love to buy stocks off of great or bad news. I like to kind of let the earnings sink in, see where the price averages out. But looking off this, assuming it stays in the 230s, maybe 240s, if I can get it maybe in the 210s again, maybe 220s, I would consider adding more. I bought a lot in the 200s, and I have roughly $550 worth of it right now. Alright guys, those are the 3 stocks that I'm looking to add in my portfolio eventually after this earnings report. If you made it to this part of the video, I really do appreciate it from the bottom and top of my heart. Thank you all, and let me know in the comment section your thoughts on these stocks. Which ones are you buying? Which ones do you like? I'd love to hear. Thank you, and of course guys, do dividend stocks, not drugs. Have a good one.